Hello everyone, welcome back to the US Stock GPS channel. It's Thursday, October 9th, and we're now in the post-market session. After several days of strong gains, US stocks finally took a breather today. Major indexes closed slightly lower. The overall tone was one of healthy consolidation and valuation adjustment, not panic. Let's take a look at which sectors led the decline, what caused it, and how we can respond. Sectors under pressure. The biggest loser today was the materials sector, mainly dragged down by gold, silver, and precious metal miners. Spot gold dropped to $3,991.30 per ounce by the close. GLD, the main gold ETF, fell 1.85% on heavy volume. Silver ETF SLV plunged intraday but recovered half its loss, finishing up 0.34%. Gold miners ETF GDX slid 4.47%, breaking below its short-term averages. Why did gold and silver pull back? Easing geopolitical risk. Precious metals had surged to record levels as safe haven trades amid global tension. Reports suggesting a pause in Middle East conflicts and progress on a hostage deal signaled that extreme global risk might be fading. As fear subsides, investors rotate out of safe haven assets, triggering a quick sell-off in metals and mining stocks. Profit-taking after a huge rally. Gold has soared all year, and many large funds were sitting on hefty gains. With today's mild market pullback, investors finally took the chance to lock in profits, a classic valuation reset, reduced inflation hedge demand, and dollar stability. The US dollar index stayed flat to slightly higher, and inflation panic has eased for now. When the dollar stabilizes and inflation fears cool, non-yielding assets like gold lose some appeal. How should investors respond? Your approach should depend on why you own these assets in the first place. For long-term hedgers, if you hold gold and silver to hedge systemic risk, inflation, or government debt, none of those long-term risks have disappeared. A short-term correction shouldn't shake your core hedge positions. For short-term traders, if you chased recent highs, trimming a portion to control drawdown makes sense. ETF and stock-specific suggestions. Still fine to hold, downside risk remains limited. Despite volatility, it actually ended up 0.24% versus yesterday, with strong afternoon buying also a hold. GDX dropped 4.47% on heavy volume, now under MA10 and with MA5 turning lower. Short-term traders can trim to 10% to manage risk. Medium-term holders may wait. If price falls below MA20 and MA20 also rolls over, reduce slightly. NEM, AEM, Barrick Gold, AG, all remain relatively low-risk hold positions. Elsewhere in the market, outside of precious metals, many AI leaders, big tech names, and semiconductors held up surprisingly well. AMD, negative 1.13%. MU, negative 2.41%. NVDA, plus 1.83%. Or RCL, plus 2.89%. AVGO, negative 0.14%. Delta Airlines said. Before the open, Delta Airlines reported strong Q3 results. Adjusted EPS, $1.71 above $1.57 expected. Record revenue of $15.2 billion, also beat estimates. Raised FY 2025 EPS guidance to $6 per share. These upbeat results sparked heavy pre-market buying, creating a gap-up open. However, the stock later gave back gains intraday before closing up 4.29%. Still a strong finish. You can consider re-entry once the stock stabilizes and resumes its uptrend. Costco. Costco's September sales report, released yesterday after hours, was excellent. Net sales $26.58 billion, plus 8% YoY. Comparable sales plus 5.7% and plus 6% ex-fuel and FX. US comps plus 5%, Canada plus 9.3%, international plus 7.5%. Digital sales soared 26.1%, showing strong e-commerce momentum. Analysts from Jefferies, William Blair, and JP Morgan all reaffirmed buy divided by outperform ratings, citing Costco's resilience and growth potential. Despite overall market weakness, Costco showed independent strength. This one can be accumulated gradually. Summary. Today's market was simply a healthy pause after a powerful rally. Investors are digesting recent gains and staying cautious amid a lack of fresh economic data. Thanks for watching. If you found this video helpful, please like and subscribe to support the channel. See you next time.